This is Horizon's Middle East and Africa, our top stories this morning. Global bond yields rise alongside the dollar as risk appetite remains subdued on the possibility of less aggressive Fed rate cuts. U.S. Secretary of State Antony Blinken and Israeli Prime Minister Benjamin Netanyahu agree the death of Hamas leader Yahya Sinwar opens up new possibilities for ending the war in Gaza. That's as Israel's military operations continue in both Gaza and Lebanon with no clear end in sight. Plus, a Bloomberg scoop, chip designer Arm is canceling a license that allowed longtime partner Qualcomm to use its intellectual property to design chips. It is just gone 8 a.m. across the Emirates, 6 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg in this week for Jumana Bersechi. And it is a busy week, so let's get right to it and take a look at where markets are positioned ahead of the trading day. If we take a look at U.S. equities, starting off Wednesday, or U.S. futures starting off Wednesday, a bit softer. And that comes a day after stocks really in the U.S. were struggling for a bit of direction and saw thin trading volume that's coming amid a deluge of earnings that we're getting this week. Meanwhile, the big story this week has really been Treasury yields continuing to push higher. The U.S. 10-year on Tuesday saw a meaningful move, topping 4.2% for the first time since July, still holding that ever so slightly. We're seeing bond yields and the U.S. dollar rising as we get stronger U.S. data, along with the perceived odds of a Trump victory as that election nears. Uncertainty, though, also affecting gold, leading to increased demand for havens right now. Gold's a bit softer, if we can see right there. But we're seeing on Wednesday, or on Tuesday, we saw gold up for a sixth consecutive day. Right now, it's at about 2,746. And bullish sentiment is also spilling over to other precious metals. And then finally, we're looking at Brent crude. We mentioned the Middle East conflict continuing to have an impact on traders and the price there. Right now, Brent crude at just nearly $76 a barrel. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're seeing Chinese stocks outperforming on the day where Japan is going the other direction in terms of equities. And the rest of Asia seems to be struggling for direction against the backdrop of those overall higher U.S. yields as traders weigh out the path for the Federal Reserve. And given that, we are also seeing dollar yen moving to levels we haven't seen since the yen carry unwind of August. Remember, that was caused by the BOJ's unexpected rate hike, and when we saw those ramifications, I mean, it was a lot to do with the BOJ's rate path as well. And going into this weekend, there's going to be a general election in Japan, so maybe that outcome from that could also affect or muddle the path or expectations from the Bank of Japan. We're keeping a really close watch on where the Japanese currency is hovering. Also keeping an eye on one of the IPOs out of Japan. $2+ billion has been raised by Tokyo Metro. This is, of course, one of the world's largest operators of subway networks, and it's risen as much as 47%. So it speaks to the appetite for Japanese equities, particularly this company. Jen.
Thanks so much, Avril Hong in Singapore for us. Now, the prospect of less aggressive Fed rate cuts is boosting the dollar and weighing on Asian stocks as the appetite for risk remains subdued. Let's bring in Ryan Lemand, CEO and co-founder at Neovision Wealth Management. Ryan, so let's just start where Avril left off there, and that's in Asia. Chinese equities seeing a bit of a modest lead over Indian equities. I mean, how long do you think this really has to go here?
Morning, Jen. Well, regarding Chinese equities, we've been positioned since June, preparing for what we hope will be a bazooka intervention by the Chinese government or Chinese authorities, which we think eventually will come. And we've seen it in the think tank that has recommended a $281 billion package to boost markets and boost the economy. So we are positioned for it. It will be very volatile, but we do think there is value there and big upside.
What is the next catalyst then, Ryan?
The big catalyst is the bazooka intervention, because as long as this bazooka intervention, and let's remind people, bazooka intervention is something the Chinese government does whenever there's a crisis like 2008, like COVID-19 period, and it goes in and it lifts absolutely everything, stock markets, economy, etc. Now, will it lift the consumer? This is the big question. But as long as financial markets are lifted up, this will feed into a wealth effect and hopefully feed into the consumers who will boost their consumption. So the catalyst is announcing a big package like the one that was recommended by the state-linked think tank of $281 billion.
But Ryan, you are bullish there, clearly on Chinese equities. But I wonder if there's anything else that could potentially get in the way of that. As you mentioned, it's going to be bumpy. There's a lot of volatility that's expected. I mean, what could potentially derail that expectation?
Derailing it is debt. Obviously, China is very much in debt. The second is the consumer not reacting to a rise in stock markets and increasing their consumption. Another one is geopolitics. Let's not forget China-Taiwan is still in play, and this is affecting. And third, obviously, is the relationships with the US, tariffs, things getting more tense, and generally economic growth faltering. So there are multiple risks there, hence the volatility. Hence, we hope the return to compensate for that volatility.
Let's pivot to the U.S., Ryan, because this week we were mentioning we're seeing a global bond sell-off, and a lot of that has to do, we mentioned, with Fed rate cut expectations. There's also fiscal concerns. I mean, does the bond sell-off then continue in your mind?
Well, the bond vigilantes are back, and they are saying to the U.S. authorities, both the Fed and the Treasuries, you cannot keep on deficit spending this way, where 50% of jobs created are government-related or government-boosted, and expect things to be fine. So this is what's holding up the economy today. So yes, again, the bond market will be very volatile up to a certain point where it becomes interesting to come in. So this is where we are today.
Interesting to come in. When is it interesting for you to come in? Is now the point?
Well, it's getting close, to be honest, though we are looking at the shorter end. So we've never been on the longer end, 10-year above. And I've been asked by your colleagues about it. It's about duration risk. The longer you go, the more volatile it gets, the riskier it gets. And we did expect this to happen because fiscal spending continues to happen at a very high rate. That's why we remain in the 1 to 3 year portion, which has done very well until now. We've booked profits, and now we're preparing to get in again because it's starting to get interesting. Let's not forget, Jennifer, that equities markets in the US are at the moment pretty much controlled by the retail, whereas the bond market is institutional investors, and institutional investors are concerned today.
So then, Ryan, broadly speaking, I mean, asset allocations, you talked a little bit about where your position in terms of bond yields. I mean, where else are you looking right now?
So we're looking at India as well, obviously. So India for us is China 15, 20 years ago. Yes, it is risky, but there is value there. We're looking selectively at the US and Europe. So for example, in the US, we're picking up the sectors that everyone is dumping, like renewable energy, which is for us an ancillary to the AI hype, because all of these data centers will need a lot of energy, and hopefully a renewable one. So this is where we're investing. Again, related to the Chinese pickup of consumers, like consumer staples, Nike, for example, it's literally in the floor. So we're picking it up. Gold, we're very much bullish on gold, and every dip we're buying.
You're buying the dip, Ryan. I was just going to end there. I'm glad you said it, though, for me. Ryan Lemand, CEO and co-founder at Neovision Wealth Management, starting us off this morning. Thanks so much, Ryan. Also, ECB President Christine Lagarde says former U.S. President Donald Trump should visit to see how hard central banks work. That's after the Republican presidential candidate said the Fed chair had the easiest job in Washington. In an exclusive interview with Bloomberg, Lagarde also defended the importance of global trade.
I think fair trade is a key boost for growth, for employment, for innovation, for productivity. And I would say that it's something that we should not throw away, because in any period of time where this country, the United States, has thrived, were periods of trade, not periods of I'm going to retire behind my boundaries and play at home. No.
I mean, there was a big UK media outlet that called the US economy the greatest economy on earth right now. I mean, would you agree with that? Where does it leave the rest of the world?
I think it depends where you are on the social ladder. I think you have to go further than look at the sort of aggregate numbers or the average numbers. Depends on where you are on that ladder. If you are at the bottom of the ladder, if you are if you have small job, not much by way of income, I'm not sure that you think of, being in the first and best economy in the world. So everything needs to be considered. But it's a case that the US, for instance, has very high productivity, has a very vibrant tech sector, and has had it for a long time. So it has capitalized on it since the beginning of the 21st century, and that there is a lot of catch-up taking place at the moment. But I think you cannot look at that in isolation. You have to look also at the people. And I think if you look at the Gini coefficient, which is probably not the best way to measure inequality, the US is not doing so well from that perspective. So it's also a question of spreading and distribution so that all people can benefit. Sorry, I'm being political now, forget it.
But do you worry about central banks being political or being dragged into the political sphere?
No, because I think there is a huge resistance to that in the decisions that we make, despite what is being suspected here or there in any place in the world. And I think for those central banks which have the privilege of independence, either by virtue of the treaties or the tradition, it's critically important to hang on to it and to defend it, because the credibility of an institution like a central bank really is a factor of how independent it is vis-a-vis the politics. And it's precious. It's very precious.
But do you think that you'll come under attack more? Not you personally, but just central banks. Donald Trump said, Jay Powell had the easiest job because it's a flip of a coin every month.
He should come and visit us. And I have thousands of hardworking people, economists, jurists, computer scientists, and I can assure you that they work super hard every day, not just once a month.
ECB President Christine Lagarde speaking exclusively with Bloomberg's Francine Lacroix. Still ahead, Blinken and Netanyahu agree the death of Yahya Sinwar opens new possibilities for ending the conflict in Gaza as the U.S. continues lobbying for a ceasefire in the Middle East. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. U.S. Secretary of State Antony Blinken is in Israel as the Biden administration makes a last-ditch push for ceasefires in Lebanon and Gaza before the presidential election. And there seems to be an agreement that the killing last week of the top Hamas leader opens new paths to ending the Gaza conflict. Dubai Bureau Chief Dana Kreish is joining us now. So, Dana, we did get a bit of a read across about what was discussed in that meeting between these two leaders yesterday. But did we get any indication about what comes next?
Morning. Yes, that's hard to tell, right? Because Blinken and Netanyahu met for an hour and a half. And after that, they both agreed that Yahya Sinwar's killing could open new possibilities to end the conflict. But that, of course, fell short of what that actually means. The U.S. is trying to push for a ceasefire before U.S. elections, but that is proving very difficult. And we saw also the U.S. wants to talk about post-war Gaza, the day after Gaza, and what that looks like for both Israelis and Palestinians. We saw from a U.S. Department officials telling reporters that the U.S. is looking at Gaza under the governance of the Palestinian Authority to unify both Gaza and the West Bank under that authority. But we know how Israel feels about that. They don't trust the Palestinian authorities, and they think that they are not to be trusted. But of course, Israel doesn't really offer any other alternative to that. So this is still the sticking point, and we don't see any clear results from that visit to Israel, though Blinken is still in the region and he is expected to visit Saudi Arabia, perhaps with talks to Arab officials to plan the post-war Gaza.
And Donna, I mean, we did get some news on Tuesday just specifically about the leaking of documents as it pertains to a potential Israel attack and how the FBI is now investigating it. I mean, why now?
So this is quite an embarrassment for the U.S. and for U.S. intelligence agencies. These leaked documents appeared on Telegram. We know Telegram is this messaging app last week. And they are based on intelligence agency, a geospatial, pretty much satellite images showing a drone, Israeli drone, doing a covert operation, as well as preparing munitions. And they say that these are long-range air-launched missiles. And this is part of Israel's plan to attack Iran, and that's, of course, in response to the missile attack by Tehran on October 1st. So this is first an embarrassment to the U.S. intelligence. This is not the first leak, and they're saying they're investigating this and that. President Biden is following up on the investigation really closely. And, of course, secondly, it's kind of an awkward reality because you're seeing that the U.S. is spying on Israel, and that could raise tensions between the two as the U.S. is trying to convince Israel not to attack any nuclear sites in Iran or any oil facilities, which could, of course, embroil the region in a larger conflict, could push oil prices up before U.S. elections. And that's a very important point for the U.S. before that November vote.
Yeah, a confluence of factors to pay attention to. UAE Bureau Chief Donna Quraish in Dubai. Donna, thanks as always for being with us. Now, coming up, McDonald shares slide after the fast food chain was linked to an E. coli outbreak in the United States. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. McDonald shares fell in late trade after the U.S. Centers for Disease Control and Prevention said a severe E. coli outbreak was tied to the fast food chain's Quarter Pounder burgers. At least one person was killed and dozens more fell sick, mainly in the U.S. states of Colorado and Nebraska. McDonald's has identified onions as being the likely source of the outbreak and removed the Quarter Pounder from some restaurants.
The decision to do this is not one we take lightly, and it was made in close consultation with the CDC. It's important to note that the majority of states and the majority of menu items are not affected. Other beef products at McDonald's, including the cheeseburger, hamburger, Big Mac, McDouble, and the double cheeseburger, are not impacted.
Bloomberg's Karen Lee is joining us now. So, Karen, we saw futures for McDonald's sliding slightly. I mean, how damaging could this be for the brand more broadly?
I mean, look, this could be damaging depending on how quickly they get it under control. And we saw some immediate impacts. Shares dropped 10% in post-market trading, and they've pared that loss down to 5.7%. But if the current slide stands, they could be on track for their biggest loss in more than 4 years. So McDonald's wants to get this under control as quickly as possible. Like you said, it's taken the Quarter Pounder out of those restaurants. It's working decisively, it says, to try and get this under control. But it's important to note just how damaging some of these E. coli outbreaks can be, even for the biggest names in restaurants. You have outbreaks 10 years ago for Chipotle, a Mexican chain in the U.S. that damaged its business for years. And then you also had something with Wendy's a couple of years ago, another burger chain where lettuce had its lettuce was tied to an E. coli outbreak. And that also saw business slide off a bit. So this is something that McDonald's wants to get under control as quickly as possible. It's working with the CDC, it's working with state public officials, and hopefully they'll get this under control quickly. But in the meantime, we're going to be watching not just what happens to the people who've been sick, but what happens to the stock.
Yeah, and Karen, just on that, I mean, what do we know about E. coli? You mentioned a number of other brands that have been affected in the past few years. I mean, were they able to bounce back from it, or does it really portend a lot of concern for McDonald's going forward?
You know, I mean, this is a background right now where consumers are skeptical about spending money. They're holding back. There's a lot of, concern about going out to eat. So I think something like this, McDonald's wants to get under control so that it can get customers back in as quickly as possible. At the same time, let's look at E. coli and how dangerous it is. It lives in the intestines. Symptoms can erupt days after it's consumed. And especially for children, it can be quite serious. So this is something people don't want to get. They don't want the elderly to get it, and they don't want their kids to get it. And obviously, it's going to make people a bit skeptical about going out to eat now.
Bloomberg's global business reporter Karen Lee in Sydney. Thanks so much, Karen, for joining us. Now, for a look at some other stories we're following this morning, chip designer Arm is canceling a license that allowed longtime partner Qualcomm to use its intellectual property to design chips. The cancellation threatens to disrupt the smartphone and personal computer markets and could force Qualcomm to stop selling products that account for much of its revenue. Starbucks shares fell in extended trading after the company pulled its guidance for 2025. The coffee chain reported its steepest quarterly sales drop in 4 years, with weakness especially evident in the U.S. and China. Starbucks says withdrawing guidance for the current fiscal year will now give CEO Brian Niccol an opportunity to solidify a turnaround plan. And American intelligence agencies say Russia and Iran may stoke violent protests inside the U.S. after the presidential election. A declassified assessment says foreign actors may encourage or amplify physical threats of violence against election workers and politicians. The partially redacted document also claims Russian-backed agents would become more aggressive if Kamala Harris beats Donald Trump. And let's just take a look at equity futures before we go to break here. It's looking a little softer today, and that is, of course, coming after we saw a thin trading volume on Tuesday, but we are in the midst of a big earnings week for a number of companies. Right there, just taking a look at where futures are. We're going to be paying close attention to that over the next few hours, and of course see how to see how the rest of the companies who are reporting today potentially have an impact on that. We're also watching closely oil. We've been paying close attention to it as crude has had a very volatile October. Right now, Brent crude just at $75.94 a barrel, slightly softer. But of course, traders are assessing tensions in the Middle East. We also got some crude inventory data on Tuesday, potentially having an impact there. If we look at WTI, it's also a little bit softer, but at $71.64 a barrel. All right, coming up, we're watching for the latest inflation print out of South Africa. Bloomberg Economics predicts a slide in September. We'll look at the outlook next. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. Global bond yields rise alongside the dollar as risk appetite remains subdued on the possibility of less aggressive Fed rate cuts. U.S. Secretary of State Antony Blinken and Israeli Prime Minister Benjamin Netanyahu agree the death of Hamas leader Yahya Sinwar opens up new possibilities for ending the war in Gaza. That's as Israel's military operations continue in both Gaza and Lebanon with no clear end in sight. Plus, the BRICS summit is underway in Russia. Both China's Xi Jinping and India's Narendra Modi praise closer ties with President Putin. More details on that later this hour. It is just gone 8:30 a.m. across the Emirates, 6:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersetchi this week. Let's take a look at where markets are positioned. It is a busy day, as we were mentioning at the top of the show and all throughout the show. But if we take a look at where U.S. equity futures are, starting a little bit softer right now, and that is coming a day after we saw a thin trading volume on Tuesday. But still, we're in the middle of a big earnings season, so a number of companies that are reporting later today potentially having an impact on U.S. equities more broadly. But the story that we're paying close attention to is really coming in bond yields, Treasury yields continuing to push higher. What we saw on Tuesday, the U.S. 10-year saw a meaningful move, topping 4.2% for the first time since July. and we've seen bond yields and the U.S. dollar rising as we get stronger U.S. eco data, along with the perceived odds of a Trump victory. That also potentially having an effect on haven demand. Gold up ever so slightly right now. If we take a look at gold, it's at 2,749, and we're seeing also bullish sentiment spilling over into other precious metals. And then finally, Brent crude. We've been paying close attention to it for a number of weeks, especially as it's been a volatile October. Right now, Brent crude ever so slightly softer, but traders are assessing tensions in the Middle East that compounded with crude inventory data. But right now, Brent crude looking at about $75.94 a barrel. I also want to bring your attention to this chart because, as we mentioned, we are less than 2 weeks away from the U.S. election. And what's been interesting to pay close attention to is just really how both of these candidates are doing. The latest predicted data that we got is showing that Harris's odds of winning have fallen back to what they were when she first entered the race, which is what this chart is showing back in July 21st. And we continue to talk about how this race is really up for grabs. They're neck and neck. And that is what we're paying close attention to when it comes to this specific chart. Let's pivot, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Yeah, hey Jen, we're seeing that Chinese stock outperformance. The drag we're seeing in Asia equities today is coming from Japan as we are headed into a weekend where a general election is going to be underway. There are some uncertainties surrounding this. So on the Japanese stock markets, we're seeing the ones that are tied to the domestic demand, to finance. Those are the big drags on the Nikkei. And this is coming despite the weakness we're seeing on the Japanese currency, levels we haven't seen against the greenback since late July. And this is, of course, against the backdrop of higher U.S. yields. You have fiscal, Fed concerns, but tie in another one, flip the board. And if we can just pull out this chart, the U.S. election is another one that is weighing on both the Japanese currency as well as the Chinese yuan. And if you take a look at this, it shows you how they've been kind of sliding in tandem ahead of what we're going to get 2 weeks out from the U.S. election. A bit of uncertainty there as well for FX space, Jen.
Thanks so much, Avril Hong in Singapore for us. Let's pivot, though, to South Africa. We're getting South Africa's inflation later today. And in September, it's likely the data print is likely to show that September's inflation slid closer to the lower band of the Reserve Bank's 3 to 6% target, according to Bloomberg Economics. Declining annual food and fuel price gains will help keep inflation lower for the next several months. Independent economist Elize Kruger is joining me in studio to discuss this further. So, Elize, are you aligned with what our Bloomberg Economics estimates are anticipating?
Yes, indeed. I do think that we will see today, the first sub 4% headline CPI numbers since March 2021. At 3.8% today would definitely be good news for South Africa.
So at least dig into that a little bit more, because we've heard SARB Reserve Bank Governor Netanyahu talking about this target. I mean, what would make this print so significant? Is it because it's below this 4%?
Yes, indeed. I think we've made huge progress over the past while to bring inflation down within the target band and also below the 4.5%. So the governor has been, pointing to 4.5% for a couple of years now, rather than to talk about the range of 3 to 6%. So the fact that we're below 4.5 and actually below 4 really indicates progress for us on inflation. And, he has been advocated for a lower target, overall, and that plays into his narrative, he's been talking about a lot.
Yeah, what do you think that is the next step then, lowering this target range?
So at the moment, we've got the range. And, I think the next step would perhaps be a point target, like a 4.5% per se. So they've actually been targeting it, I would say, informally. But, formally, it's still a 3 to 6% target band. So I think, what I hear from the Reserve Bank is they've got, I would say, they would like it to be a point target lower than 4.5. But I think the first step might be first to say it's a point target of 4.5.
What would formalizing it, though, do? Yeah.
Yeah, I think that will just give the Reserve Bank more scope to target it. They've been doing it informally. So between 4.5 and 6, the bank has been reluctant to move on policy because they want to see it lower. So they have, I think, already started to target only 4.5, although the range is still formally what we need to look at. So I think moving the range lower could be a starting point. In my view, I think, to go too low at this point in time in South Africa is not prudent. I think where we are now, we've seen progress, but this economy also needs the stimulation that could come in now from monetary policy loosening, given that we are indeed, in terms of average, on the target of 4.5. So I think it's under control, and therefore I do believe we should see the loosening in monetary policy that's aligned with our current target. Talking about a future target or a change is almost another debate. But where we are now, we're right bang, on average in line with our target, 4.5% for this year and next. So we should have room to lower interest rates, given that we have inflation under control relative to our target band.
Talk about that. I mean, how much room, how much scope then is there to lower, and how far are you expecting the Reserve Bank to go then in November?
So in November, I think it will only be 25 basis points, as they are quite conservative. But I think, cumulatively, we've got another 100 basis points that need to be cut or sliced off our current level of the repo rate. So that would mean 25 basis points in the next 4 meetings, which will take us to May next year. So by that time, we should then have a cumulative, loosening of 125 basis points. And that will start to make a sizable, difference in household budgets. And we could start to see, more notable increases in retail spending coming from this sort of alleviation of pressure that's been on household budgets up to now.
But we hear Netanyahu talking a lot about imported inflation, right? Because South Africa is tied to so many other economies. I mean, is there the potential that there could be external factors that prevent the Reserve Bank from actually loosening policy as you see it?
Yes, indeed. I mean, the rand exchange rate is always a big factor when it comes to inflation. But I think where we are now, we expect the rand exchange rate to appreciate into next year, really based on what's happening to global interest rates. If we see the US interest rates being cut further into next year, it should result in a weaker dollar, which should help South Africa. And also, I would say our fundamental economic story has also changed in South Africa. We've got better medium-term growth prospects now, and that should also result in a somewhat stronger rand exchange rate as we see more capital flow into South Africa, more investment spending happening, more foreign direct investment coming to us, and eventually also hopefully the bond investors returning to South Africa. So I think there's some upside to the rand exchange rate into next year, which should also support the lower inflation environment.
You believe that we'll see a weaker dollar?
Yes, indeed. I think once we start to see more notable cuts in US interest rates. So for now, obviously, there's again a bit of a pause in expectations. So not as aggressive as expected a month or two ago. But still, I think the US interest rates will also have to be cut quite a bit more. Otherwise, the economy might end up in more weaker or in recession. We're not talking recession really anymore. But, there's definitely scope on that side also for loosening. So, South Africa should, according to expectations now, maybe cut less than the US if you look at a horizon of about 12 months, and that should also support the rand exchange rate from the point of view of interest rate differentials.
We'll leave it there, and we'll wait for that data to come out later today. Independent economist Elize Kruger joining us here in studio. Thanks so much, Elize, for your time. Now, coming up, a critical 24 hours for Boeing, the troubled plane maker, signaling a grim earnings report on the way as it braces for striking workers to vote on a pay offer. More on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Bank of America CEO Brian Moynihan is urging the Fed to be measured in rate cuts, warning against going too far. Speaking exclusively with Bloomberg, he also told us the central bank was, quote, late to the game in lifting borrowing costs in 2022.
We not only have all the general economic work, we have the top research team in the business. They do a great job, Candace Browning-Platt leading them and all the colleagues around the world. But we also have 60 million American consumers. And so when you think about the U.S. economy, we have great insight into what's going on. If you look at that consumer spending this year, the month of October so far versus last year, or third quarter versus last year's third quarter, it's up in the 4 to 5% range, which is consistent with a low inflation, low growth economy. That's across about $1.25 trillion to $1.5 trillion spent in a quarter. So it's a big sample, and the people moving around, they spend it each quarter on all different things, but it's generally growing consistent where we were pre-pandemic when you had Fed funds rate at the 2% level, 2.5% level. You had inflation in control, and you had growth in the 2% level. So that gives us confidence that our experts that do all analysis are backed up by the data we see in our clients, and that's what we see.
For the consumer, is there a degree of bifurcation there demographically?
It's less about bifurcation, because I'd assume that there's sort of two. Look, inflation hits people in the lower income brackets more than it does others, but the good news is gas prices have come down, food prices have tipped over, inflation's in control, it's down in the 3% range as opposed to it was running pretty hot, and so that helps. But if you have auto debt, that debt, and you want to get a new car, that debt is higher. If you have mortgage debt and you already had a mortgage loan, it's very low. And so it really depends on the consumer and really where they are. But the average American consumer has more money than they did before the pandemic, is in better credit quality before the pandemic, still has the money in accounts from some of this stimulus in the pandemic, and is spending money. And that's all good stuff for the U.S. economy, because we're such a consumer. That's the unique thing about it. It's a consumer-driven economy. It's a consumer-led economy.
Are you thinking about making allocations or allowances for stress at this point?
We always do that. So every quarter we run stress tests, thousands of them. Every day we run them in the markets, business stuff. We always look at it. And so what's the case if it turns out the wrong way? So even how we set our reserves, we have a modeled series of cases we put in. So it's not all base case. Base case is about half, and the rest are stress cases, and you add them all together. We're actually set our reserves as if unemployment was going to be at 5% at the end of next year, not what the market predicts at 4.3. So there's a conservatism built in to that, and then we look beyond that.
There's also some potential complications for the Fed depending on what happens in just under 2 weeks' time, right? Does the fiscal scenario, particularly under another Trump administration, but also certainly there are risks when it comes to the Harris camp as well. Is that something that you're thinking about? So I would separate a very near-term question of the Fed getting the trajectory. Our experts have them cutting again a couple more times this year, so 100 basis points this year and another 100 basis points more evenly spread each quarter next year, and gets to 3 to 3.25 as a terminal rate. And then inflation comes down to the 2.3% as we move into 25 and 26. And so that is a well-engineered Fed change. And so the danger is that data, or they go too fast or too slow, and that risk is higher now than it was 6 months ago. And so as they move, everybody's going to watch them, and you see the sell-off in treasuries one day and you see the rally the other day. Everybody's going to watch all that.
Bank of America CEO Brian Moynihan speaking to Bloomberg's Heidi Stroud-Watts in Sydney. Now, it's a critical 24 hours ahead for Boeing after the plane maker signaled it will report a huge loss when it announces its third quarter earnings. It's also facing a cliffhanger vote from striking workers on whether to accept a sweetened pay deal. Bloomberg's global aviation editor, Benny Camel, is watching all of this for us. So, Benny, what is the main thrust of today's earnings? I mean, some numbers were already released previously, looking a bit grim for the airline.
Yes, it really is looking quite grim for Boeing. We had a couple of numbers when they announced a couple of weeks ago that they would cut jobs. So they announced a 10% job reduction. And as part of that, they gave a preview of some of their numbers. So we know that sales missed. We know that they will have another outflow of cash. That's a metric that's very closely watched. They had a huge outflow in cash in the first and the second quarter. This time around, about $1.3 billion in outflow, slightly less pronounced than it was previously, but still an outflow nevertheless. And this is something that the company is trying to turn around to actually get cash generation again. So that's something that investors will have to wait for. So really, with those numbers out already, it's all in the messaging. We will get a memo from the new CEO, Kelly Ortberg, to employees, and we'll be poring over that very closely to get any hints of sort of how he sees the road to recovery for Boeing, how he sees the next steps. Broadly in the market, people say, we don't know what Boeing will look like in, say, 5 years, But what we can probably say with certainty, it'll be a very different company. He'll have to make some pretty dramatic changes to get this company back on track.
Yeah, and Benny, I mean, the real surprise element for the plane maker will also be that strike vote later in the day. I mean, any indication which way that could potentially go?
I wish I knew, and that would make my work a lot easier today. But we honestly, we don't know. If you take a sort of slightly unscientific sample of the voices that are out there on online forums, initially it was sort of split. A lot of people said, look, this doesn't look so. The number on the table right now is a 35% increase in the wages, and that's up from the initial 25%. So they have moved, 10% percentage points isn't nothing, but it still falls short in some other areas. So you have a lot of people still out there saying, that's not enough for me, I'm going to vote no. Now, usually the people who go online and voice their concerns are maybe the more negative people. So we might see a surprise today. We might see Boeing get this over the line and the workers ratify it. They need 50% plus one. The choreography is such that voting happens while Boeing releases the earnings, and then they close at 5 Pacific time, 5 p.m., and we might get a result at sort of 7 p.m. tonight on the West Coast. So that's in the Asian morning tomorrow, really. So this is really a 24-hour scenario for us.
Bloomberg's Benny Campbell, appreciate you staying up for us and giving us the update there. We'll check back in with you. All right, now coming up, Vladimir Putin returns to the world stage at the BRICS summit in Kazan. More next on Russia's biggest gathering of world leaders since the Ukraine invasion. But before we go, Bloomberg News editor-in-chief John Micklethwaite spoke to U.S. Deputy National Security Advisor John Feiner about the U.S.'s relationship with China and global influence at a panel in Sao Paulo at the Bloomberg New Economy Forum.
There was a narrative that I think that was prevailing when this administration took office, that the United States was sort of on the verge of being surpassed by China as an economic power. That United States influence was waning in the world, that China's influence was on the rise. I think those predictions have very much been reversed over the course of the last few years, in large part because of the partnerships the United States has built with key allies and key partners.
The GNU has certainly put South Africa on a more positive trajectory. In the home affairs space, it's enabled us to really deliver some really meaningful reforms already. And we're going to have to climb a few mountains together and make sure that we find each other on areas where we disagree, because that's normal. In any coalition government, especially one with 10 parties, you are going to have disagreements. It can be really healthy for a society to deal with those in a mature way. And that's the challenge that we now need to confront and not allow those things to derail us, but instead to help us build deeper consensus so that we can implement more reforms and create more jobs.
That was South Africa's Minister of Home Affairs, Leon Schreiber, speaking with me about the challenges facing the country's coalition government. Let's pivot, though, to BRICS. The largest gathering of world leaders in Russia since the Ukraine invasion is underway. Vladimir Putin has met with China's Xi Jinping and India's Narendra Modi at the BRICS summit, with both leaders praising closer relations with Moscow. Meanwhile, South African officials are raising concerns over adding more members to the alliance. Bloomberg's Indira Oganga is joining us now from Kigali. So, Indira, why is there hesitation from members over this expansion?
Jen, just for context, in the last BRIC meetings that was held in South Africa, 6 new members were inducted into the bloc. And out of those 6, we've seen some mishaps here and there in terms of seamlessly integrating them into BRICS. One, Argentina pulled out after they had an election and got a new president. And you have a country like Saudi Arabia remaining non-committal. So in this meeting, members are a little bit hesitant. We're seeing interest being expressed by Nicaragua, by Malaysia, by Thailand, and also Turkey. But members are not as open as they they were in the previous meeting. India, for example, is saying they're open to having these members coming in as partners of BRICS without voting rights, something that South Africa, as you mentioned in the intro, is supporting. They're against inducting new members like Nigeria and Morocco into the body. And this can be explained by the fact that Nigeria and Morocco are some of the biggest economies in Africa, most advanced, and hence they could potentially dilute South Africa's influence into this bloc. You also have UAE and India also agreeing on the fact that this growing perception that BRICS is a body that is meant to counter the US influence and they're against the West is a little bit misleading. If anything, they have great working relationships with the West. And this is a question that was put to the US press secretary by American journalists. And she was very categorical in saying that they don't see BRICS as an evolving geopolitical rival. Instead, they'll continue to work in partnership with individual BRIC members.
Yeah, that's been a bit of the back and forth that we've been hearing over the past year as well, since it was here in South Africa. Andiro, can you just give us a bit of the highlights from President Putin's bilateral meeting with President Ramaphosa? We mentioned some of the other leaders he met with, but how did this meeting go?
This meeting could go as good as it went because, first of all, President Putin said there's room to collaborate more in areas of energy, in areas of agriculture, industry and science. And two of these areas are really critical for South Africa. Energy, they've grappled with load shedding up to 8 hours of darkness. And so even though they're beginning to recover, all the help they could get in that sector is very much welcomed. If you look at agriculture, climate change has ravaged crop production in the south. So this is also an area they'll be keen on partnership. Growth is also beginning to pick up. Trade momentum growing by 3% from January to August. And President Putin said that that's a good thing. What's important is that these two countries agree that their relationship is really, really fundamental. It's a time when Russia is being alienated by the rest of the world. So people like South Africa who are close to them, they're going to hold them really tight.
Absolutely. Bloomberg's Andiro Oganga in Kigali for us. Andiro, thanks so much for your reporting, for being with us this morning. All right, that's Horizon's Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Gear Up. This is Bloomberg.